afternoon, we will pay attention to VAT in the cash receipts journal to do the calculations and also show how it will be recorded in the general ledger. So if we look at this cash receipts journal, you must remember that the bank, debtors control and creditors control always includes VAT, so they are the only three accounts that's 115% accounts. All your income and all your expenses excludes VAT, so they are 100% accounts. And all your other assets and liabilities except bank, debtors control and creditors control is 100% accounts. So if you do an income statement or a balance sheet, the only figures that can have that included is bank, debtors control and creditors control. And that is then 15%. If we look at the unknown figures, we will not be able to calculate the bank figure if we don't know the VAT, because the amount that was received in sales is included in the bank, debtors control is included, VAT is included, and the sundry accounts is included. So the first thing that we have to do is we have to determine which of these figures include VAT so that we can calculate the VAT. Okay, so VAT excluded, so it's not included in the figure, is 100%. VAT is 15%. VAT included is 100%. Okay, so 115%, sorry. Then we look at the different figures. Sales, we have to calculate VAT on sales. Debtors control is the amount that they paid, and on payments you don't include VAT. VAT is included in income, expenses, and when you buy assets. Then the sundry accounts, if we look at that, there is an amount of 10,000 for rent and 10,000 for capital contribution. On capital contribution, you don't have VAT, but in rent there is VAT, so we will add the 10,000 to the amount, and that means amounts that we received that belonged to us was 54,000, but we received VAT on it, so the percentage that we want to know is 15 over the percentage that's known times 54,000, and that will give me 8,100. So it means the VAT amount is 8,100. If we want to know what is the cash receipts amount, the sales is included, debtors control is included, VAT is included, and the sundries is included. So if I add those figures together, it gives me the total as 90,600. Okay, now when I want to post these entries to the ledger, I will show that I have a bank account. That's an asset. This is 115% account. Increases on the debit side. And I will show that the bank increased with 90,600. Several other accounts will be credited. So we will either write sundry accounts or we will say total receipts. Both of them are correct. Then I go to sales. Sales is an income. Income increases on the credit side. And this is 100% account. It can't include VAT. So I will credit the sales account, indicate that this amount is included in the bank figure, 44,000. Then the debtors control account. The debtors paid us, so it means that my asset for debtors decreased on the credit side, it increases on the debit side, and debtors control is 115% account. So we will indicate that this figure in the debtors control is also included on the debit side of the bank figure. VAT output. Okay, in VAT output is a liability to me because I collect the money on behalf of SARS and I owe the money to them, so I have to pay it in future. So it's a liability, 15% account, and I will show that the liabilities increased with 8,100. Of that 20,000, 10,000 is for capital and 10,000 for rent. So I will credit rent income. Income increases on the credit side. It is 100% account. So I will credit rent income with 10,000 and show that it's included in the bank figure on the debit side. And then the last one is for capital. This is also 100% account, and the capital increased with 10,000. So if we add up all the figures here on the credit side, it will equal the amount on the debit side. And that's why you will write every time bank to indicate that this figure is included in the bank figure. Okay, if we look at the cost of sales, the figure is 27,500. So cost of sales is not included in the bank. Therefore, we have to do a double entry for cost of sales. And we will show that the expense to be able to sell the goods was 27,500. This is an expense that increases on the debit side, and it is 100% account. And I will show that I will credit my trading stock account with 27,500. So trading stock is an asset that increases on the debit side. It is 100% account. We sold goods, so we have less stock available. So trading stock must be credited. And we write the cost of sales to indicate that the double entry is in the cost of sales account. Okay, this is the entries that we have to do for the cash receipts journal. Now, what's very important here is that you must know that the bank debtors control and creditors control is 115% accounts. So, for instance, they only asked you to do the general ledger, and you looked at the total amount of sales. Then you would say that figure is 100% account. If I want to calculate the VAT on it, it will be 15, the one that I want, over the 100 that I know, times the 44,000. I hope this explanation on the general journal and all the other subsidiary journals will help you to understand the calculations when there's unknown figures for VAT, and to know how to do the entries in the general ledger.